For joining us again on TVC Breakfast. Well, let's talk about the latest monetary policy committee intervention now as a way to revive the economy. Well, the MPC of the Central Bank of Nigeria has raised the benchmark interest rate by 200 basis points, this to 24.75%, and this was announced by the CBN Governor Yemi Cardoso after the second MPC meeting since he assumed office. And joining us to talk about this, the CEO, Center for the Promotion of Private Enterprise and a former Director General of the Lagos Chamber of Commerce and Industry, Dr. Muda Yusuf, is here to share his thoughts with us. Thanks a lot, Dr. Yusuf, for
Thank you very much for having
the program. So what do you really think? CBN says, this was a unanimous decision, of the committee to ensure that, we move in the right track. They're even projecting that by the end of the year, by December, inflation would have dropped. And this is, another way to tame the worrisome inflation. But experts are worried.
Generally, I think we should congratulate the Central Bank of Nigeria.
Okay.
Because we are beginning to see some positive outcomes from its policy measures. The CBN has been under enormous pressure over the last couple of months, especially with respect to what was happening to the exchange rate. And in the last couple of weeks or days, we have seen a dramatic turnaround, a dramatic improvement with regard to the exchange rate situation. And what that is telling us is that the CBN is doing something right. There may be issues, pros and cons with some of those policies, and that is typical of economic policies. Whatever policy you put on the table, there will be costs, there will be benefits. What's important is that the net benefit is positive. And from what we are seeing with respect to the exchange rate, I think something positive is happening. And it's also speaking to what the president has always said, that there is light at the end of the tunnel. He said that repeatedly. So I think we must give kudos to the central bank for that progress that has been made. Having said that, coming back to the issue of the MPC, in managing the economy, you have the monetary policy approach or instruments, you have the fiscal policy instruments. Now, for the monetary policy, of course, the primary mandate of the central bank is price stability. And the CBN can only use the tools at its disposal. And the tools that are at the disposal of the central bank are all these tools that are being manipulated or adjusted, to be able to tame inflation. Okay. So that is why we have seen this movement. Yes, there's a lot of debates whether the movement is too fast or too high or too slow or moderate. There's a whole lot of conversation around that. But what is happening is that what the CBN is trying to do is to ensure that we regulate money supply as a way of reducing inflation. But more importantly, also about ensuring that we have some stability in the foreign exchange markets. From the foreign exchange market point of view, we are beginning to see some improvements. From the inflation point of view, the impact is not being felt immediately. That will take some time. And it's also important to also emphasize that the issue of inflation goes beyond what monetary policy alone can handle. There's a lot that needs to happen with respect to the cost of production, with respect to, the fiscal policy measures. And so there's a whole lot that needs to work together to be able to achieve that. The rates that has been put on the table by the central bank, for me, is also a bit high, because of the implications for interest rates, because of implications for investors, particularly those who are borrowing money to fund their investments. And even more so, those who are already borrowed the money. When you are already indebted to the bank,
You are caught up. You are caught up in this.
You already invested the money. It's not a reversible process. And most of these rates, when you are signing off on these loans, they are flexible, like a floating rate. They put the clauses there that depending on the prevailing situations, the rates will be adjusted. So that is putting a whole lot of pressure on those who already have this exposure to the banks. So that is the challenge. Because while we are dealing with inflation, we should also worry about investment. We should worry about production. We should worry about productivity. So these are some of the trade-offs that I think we need to see how to balance out.
Well, very good. You with that question, you've actually answered a lot of things that are rioting in my head. But then the recent news that came out is that of the CBN raising capital base for mega banks to 500 billion naira. Then Cardoso giving them 2 years, and also national lenders rate to 200 billion naira, and other fintech banks to about 50 billion naira. What impact do you think this will have on the economy?
Well, first about the whole concept of reviewing the capital base. The last time we had a major review was in 2004 under Soludo. July 2004, Soludo announced a review of capital base from 2 billion to 25 billion. It was a very big jump. And it gave, I think, 1.5 years, because the announcement was made in July, and the deadline was December 2005. So that disrupted a whole lot of things. First, because of the rate of increase. Second, because of the time limit that was given. So some banks had issues. Some banks went under. Some banks went into a merger which ordinarily they shouldn't have gone into. Marriage of strange bedfellows. Some bank workers lost their jobs, and some shareholders also lost their investment, which was not a particularly good thing. Now, but at that time, 25 billion naira was an equivalent of almost $200 million. Today, 25 billion naira at that time is almost equivalent of about 250 billion naira today. If you use the elementary, conversion of using the dollar basis to compute it. So what the CBN has done, I think, is in order to ensure that we have a very strong banking system to be able to support the economy, to be able to support the lending that they do, But what I think is a bit, which I'm not too comfortable with, was the increase for the international bank, which was 500 billion. 500 billion is a lot, especially when you compare the volume of business that some of these banks that have international offices do. It's not as if they do so much business out there. Many of them still do more business here than out there. But as a principle, I think it is good in the light of the massive erosion of the value of the naira over the last 10 years or so, when we had the last major capitalization. Another good thing that has happened with this policy is the fact that enough time has been given. We are talking of 24 months. So it's not as if the CBN is stampeding the banks. They take their time, either to go to the capital market to raise funds, or to invite more equity investors, or to also take their time to select who they want to merge with.
Kemi, sorry, and that's where my fear actually is, because if you ask a lot of people, they will say banks of the world are actually designed to steal people's money. This is what I mean, in the sense that for instance, you get to receive stamp duty. Oftentimes, when you do transaction, they remove certain amount of money. They charge you even when you receive money from others, and all of those hidden charges and extraneous charges that some of these banks actually get from people. Do you not feel that this kind of policy might make them go voraciously getting into how to mop up some of these funds in order to meet up with this quota, which definitely might work against the interest of their customers?
No, they are not related. What we are dealing with here is capitalization. The capital base that you need to do your business. What we are talking about is profitability in the course of the
But they need
business.
profit to be able to
No,
also
there are different
capitalize.
things. For capital, you need to get more shareholders to put money, or more investors, or you go to the capital market, just as I said. In terms of the profit is what they share as dividend and all of that to those who. So I think what you have said is a purely regulatory issue, to have effective bank oversight to ensure that the banks don't exploit their customers. Secondly, it's also to have adequate sensitization of customers. That if you have a feeling that the banks are playing funny with you, excessive charges, there should be an avenue for you to lodge complaints. And they have, the CBN has a very robust customer service department. So I think those are the things that should. So what we are talking about is more of ensuring effective banking supervision and oversight and consumer protection. I think that is what should happen.
Right, and I want to know your assessment now, because earlier in the week, I think on the 27th, there was, kind of speculation at the level of interest that Nigeria's treasury bills as sold by the CBN. It generated, according to reports, 1.64 trillion naira, and reports went on to say that this is also reflecting an increased investor confidence, especially in the light of this latest CBN intervention. So how does that seem to you in terms of the impact of this on our drive to, tame inflation and improve the economy?
No, what has happened in that space is the fact that we have seen an increase in interest rates. And because of that, even treasury bill rate also has moved up, I think, to over 20% or so. Right. So these instruments are becoming more attractive to investors. So rather than use your money to go and be speculating on the naira and all of that, a lot of people are also putting their money in these instruments because the returns are becoming more attractive. And that is also making it possible for the CBN to attract more funds into the system. But the thing to worry about high interest rate, first is that businesses need money, to be able to function. Now, if interest rate is getting too high, which is what this policy is also meant to at least to curb, borrowing, it has a serious negative effect on investment. Now, prime lending rate as at February, before this latest hike, was about 26%. Now, with this hike, prime lending rate may go to 27 or 28%. And prime lending rate is the rate that you give to prime customers, customers with perhaps the lowest risk. That is what you call the prime lending rate. So if you are talking about SMEs that are perceived to be of higher risk, their rate goes up to 30%, and with what has happened now, it may be going to close to 35%.
And people are fearing job losses. Do you also share?
Of course, job losses, because, if you are dependent on bank facility to run your business, there's no way you can run your business
break even
with this kind of rate.
How much money do you want to make?
It's crazy.
You are talking of a return of over 30% on the cost of fund. So how many business can make that kind of return to be able to pay that kind of interest rate? So it's a major risk to businesses. And it also has the risk of disconnecting the banking system from the real economy. Because if going to bank is going to put you in more trouble, you will stay away. You stay away from the bank. You go and see how to raise more equity. You can't raise more equity, whatever savings you have. And so you cannot grow the business on the back of bank facilities.
You just be working for your...
Yes, because you can't just make it. Look at all the sectors. Is it agric that you want to go and invest in and you make 30% return? Is it manufacturing? Is it real estate? Is it mining? No, name it. So it's a major issue. It also has implications for the quality of the loan assets.
Okay.
If I'm servicing a loan and you have moved interest rate to close to 30%, how am I going to service the loan? So there's also a risk that many of the loans
Right.
also begin
Right.
go bad. You know?
All right.
So these are the challenges. There are pros and cons, but the good thing is that at least we are making some progress.
Right, and you have also said that there is light at the end of the tunnel, and
taking the words of the president.
Taking the words of the president, and
I believe that.
Yes, and I also hope
apart
that
from
we
the president
can
saying
ride
that naturally there is
that.
light at the end of the tunnel.
There is light at the end of the tunnel. Dr. Muda, Yusuf, we've run out of time. We thank you for the nuggets that you have been able to drop within our time constraints, and look forward to more engagement with you on this and other subject matters. Thank you, Dr. Muda Yusuf, for speaking with us. All right, it's the Friday edition of TVC Breakfast, meaning there is entertainment wrap, and that's what's next.
Nigerian celebrity Idris Olarewaju, also known as Bobrisky, stole the show at a movie premiere called Ajakaju, where he was awarded Best Dressed Female. Social media went agog with such news, and many criticized the organizers for giving him such award. One of the producers of the movie, Eniola Ajao, has now come out to apologize for choosing a cross-dress to win this category.
All right, and the conversation continues. Interesting stuff there in that entertainment report, but we've run out of time, and you can't take it further. Of course, we know that some of the stories are still generating reactions in Nigeria and beyond. But then, as we wrap up, we must remind you that the views and reactions of all our resource persons are theirs and have no connection with TVC News. We thank you very much for sparing your time to speak, to join the program today. There is TVC Breakfast Saturday, and hopefully we will catch up some more tomorrow. So stay with us. Up next is Your View with the Ladies. Thanks for watching. Bye for now.
And Good Friday.
And happy Good Friday.